Welcome to the world of trading, where timing is everything. Today, we are diving into the London Breakout strategy, a powerful approach to make profit on early market movements. The London session is one of the most active periods in the forex market. Its overlap with the Asian and US markets leads to higher liquidity and volatility, setting the stage for potential breakouts. Before the London market opens, price often consolidates within a defined range during the Asian session. Traders monitor this range closely, anticipating a breakout as the London session begins. When the price breaks above this range, it signals a buying opportunity. Conversely, a break below suggests a selling opportunity. It is recommended to set a stop loss just outside the opposite end of the range to lower your risk. To confirm the breakout's validity, traders often use volume data and technical indicators like RSI or MACD. This helps ensure that the breakout is supported by market momentum. Let's see how it works through an example. During the Asian session, GBP/USD traded within a tight range, establishing a high at 126.60 and a low at 126.25. These 35 pip consolidations set the stage for a potential breakout as the London session approached. At 8 a.m., coinciding with the opening of the London session, GBP/USD broke above the Asian session high of 126.60. A buy order was triggered at this level. A stop loss was placed just below the Asian session low at 126.20, and a take profit target was set at 127.20, aiming for a 60 pip gain. Here is the effectiveness of the London breakout strategy. The bullish momentum continued, and by 10:30 GMT, GBP/USD reached the take profit target of 127.20. This trade yielded a 60 pip profit with a risk-reward ratio. This strategy has several benefits: high liquidity during the London session, compatibility with major currency pairs like EUR/USD and GBP/USD, potential for quick profit in a short time frame. However, be aware of potential risks. False breakouts are also common. High volatility may lead to huge losses. Not ideal for long-term investors. Ready to learn more about technical analysis and setups? Follow us and visit zforex.com.